Hi guys, hope that you're all doing well. This is part 2 of analysis and interpretation. I prepared a document that shows you all the different formulas that you should know under all these different areas of analysis: your profitability, liquidity, solvency, return, as well as financial risk or gearing. So these are all the different formulas that you need to know. And remember, I told you guys that there will be some missing figures that you need to calculate. I also made a list of all these figures. So if you need a copy of this information sheet or this formula sheet, I don't mind sharing it with you guys. You just have to reach out to us. So let's look at the profitability ratios first. I also have a copy of the information sheet so you can see exactly what the different formulas are. Let's look at profitability. We first have gross profit on sales, the percentage. I told you guys that it's gross profit over sales times 100. It's also featured in your formula sheet. So in your information sheet, there is gross profit over, it should be this one, gross profit on sales. That is the formula. Now let's look for net profit on sales, the percentage. We have to look for net profit before tax. We have net profit before tax as well as net profit after tax. It depends on which one they need you to calculate. So can you see that in terms of net profit on sales, I said net profit before tax over sales times 100 and net profit after tax over sales times 100. So there are two different ways. Now let's move to operating expenses on sales. You know that it's operating expenses on top of sales times 100. There's the formula. Now let's move to operating profit on sales. It's right next to operating expenses on sales, the percentage. And lastly, we have the gross profit on cost of sales, which is basically your markup. So can you see that the first few formulas make up for the profitability financial indicators? This video is proudly brought to you by Sun City Resort. Sun City is one of South Africa's most iconic vacation destinations, bringing together luxury, adventure, entertainment, and relaxation in one unforgettable resort. From beautiful pools and exciting activities to incredible restaurants, entertainment, and breathtaking surroundings, there's something for everyone to enjoy. Whether it's a family holiday or a getaway with friends, Sun City delivers an experience to remember. With so much to see, do, and explore, every visit can become a new adventure. Make your next getaway unforgettable. Visit Sun City and experience one of South Africa's premier vacation resorts. Now let's look at liquidity. In terms of our liquidity ratios, we have the current ratio, and the formula is current assets to current liabilities. Where's the formula? Here it is, current assets to current liabilities. That is the formula. Now let's move to asset test ratio, where we have current assets minus inventories to current liabilities. That's the formula. Now let's move to the next one. We also have trade and other receivables plus cash and cash equivalents to current liabilities. This is exactly the same as this formula. So in terms of asset test ratio, you can either use that one or the second one. Let's move to net current assets, which is your net working capital. It's current assets minus current liabilities. Let's look for the formula. In terms of current assets, I don't think that the formula is in the information sheet, so you need to know that one by head. Let's look for turnover rate of stock. It's cost of sales over average trading stock. Let's check whether it's in the information sheet. Cost of sales over average trading stock. There it is. So the turnover rate of stock is there. You also need to know how to calculate your cost of sales as well as your average trading stock. Other formulas are featured below. Now let's look for debtors collection period. We have average debtors over credit sales times 365. Let's look for it. Average debtors over credit sales times 365 days. There it is. It's also in the information sheet. Now let's look for creditors period payments. It's average creditors over cost of sales times 365 days. We also have average period of stock on hand. It's average trading stock over cost of sales. Average trading stock. Let's look at whether we have the formula. Average trading stock over cost of sales times 365. There it is. So guys, when you look at the information sheet, you don't have to cross as I've done. Let me erase this. If you want to practice, you can look at the formula and then write that it's average period of stock on hand. I can't really write this here as I don't have enough space. So when you practice, you don't have to cross these. You can just write it next to your formula, write what it is. Now let's look for solvency ratios. We have solvency ratio and net assets. So the ratio for solvency ratio, the formula is total liabilities to total assets to total liabilities. There it is, total assets to total liabilities. In terms of net assets, we have total assets minus total liabilities. Is it featured here? Total assets minus total liabilities. It's not featured. So you might need to know net assets by head. Let's look for the return ratios. In terms of the solvency ratios, we only have 2. In terms of the return, we have about 4 of them. So let's look for the return on average shareholders' equity. It's net income after tax over average shareholders' equity times 100. We're looking for the percentage. That's why you have the 100. So net income after tax over average shareholders' equity, there's the formula. Now let's move to earnings per share. You have net income after tax over number of shares issued. Net income after tax, number of shares issued times 100. And there it is. And let's look for dividends per share. Dividends for the year over number of issued shares. Let's look for dividends for the year over number of issued shares. I believe it's this final dividends over number of issued shares. Okay. So we also have net asset per value, which is shareholders' equity over number of issued shares. Let's look at shareholders' equity. There it is. It's also featured. We also have financial risk or gearing ratios. We have debt or equity ratio, where we have non-current liabilities to shareholders' equity. There it is. It's on top. And then we have return of total capital employed. The percentage, it's net income before tax plus interest on loans. Let's check. Yes, net income before tax plus interest on loans all over average shareholders' equity plus average non-current liabilities times 100. There's the formula. So we now have the different formulas to our financial indicators. We now have to look at supporting calculations. For example, let's look at gross profit on sales, the percentage. If you don't have gross profit, you have to know that gross profit is sales minus cost of sales. Now let me take you guys through the document. These are the figures. Gross profit is sales minus cost of sales. Missing sales is gross profit plus cost of sales. Missing cost of sales is sales minus gross profit. We also have cost of sales components. You should know that cost of sales is opening inventory plus purchases minus closing inventory. We also have calculations for purchases, opening inventory, as well as closing inventory, the missing ones. And let's move to the sales. If you want to know your total sales, you should have your cash sales plus your credit sales. In terms of cash sales, we take our total sales and subtract our credit sales. In terms of total purchases, it's cash purchases plus credit purchases. And our credit purchases formula is there, as well as cash purchases formula. You also have operating and net profit calculations, where you calculate your your operating profit, expenses, your gross profit, net profit before tax, net profit after tax, as well as net profit before tax. Then we also have essential averages, if you want to find your average trading stock, debtors, creditors, shareholders' equity, as well as non-current liabilities. And then we have liquidity, asset, and liabilities figures to find your current assets, current liabilities, net current assets, liquid assets, total liabilities, as well as net assets or shareholders' equity. We also have our shares figures, and then we have credit and cash percentage split, where I show you guys an example, and then I show you guys how to work backwards. You have example 1 as well as example 2. I also did working backwards in the cash budget video, so you can also check that one out. We also have working backwards from financial indicators, and then I made a list of how you can really master this topic in 8 different steps. So get a copy of this document, and when I do the different examples, it'll just be me writing down the figures, substituting, and showing you how to get to your final answer. So that is all under analysis and interpretation. Thank you for watching. Please like and subscribe. I'll see you in the next lesson.
We are the top learners of classes in session, and we have received 1,000 Rand cash prize for our academic journey.